Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US equity markets dived last week on concerns about cooling labour market and fears over a hard landing. Non-farm payrolls increased by 142,000 versus the 165,000 expected, and previous month's figures were revised lower. Providing some offset, the unemployment rate decreased slightly to 4.2% from 4.3%. In summary, the jobs figures weren't weak enough to guarantee a 50 basis point rate cut, which is what the equity market really wants to see. With the Fed now in the blackout period ahead of the September FOMC meeting, attention turns to this week's CPI and PPI updates. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as they start the new week. Okay, so this is the chart of the Nasdaq 100. And in last week's update, we put out a tactical short basis idea. And the reason for that is we thought that the Nasdaq was missing a third wave lower or missing a leg lower as part of this correction from the 20,690 high. The call for a short trade or a tactical short bias was also based on the idea we are up against the seasonally weak backdrop of September. And that has played out quite well. The target for the down move is in this area here. So what I've suggested is that with the possibility of overshoot into this 17,000 area, which is a wave equality target, I now think that you can move your stop loss lower from this point above this 19,938 high down towards or just above last week's high. So around 19,450-ish is where I'd be working that stop loss now. Probably just 20 points higher than that, actually. And in terms of what I'd be doing here, well, this is the target for the trade. And I think in this area here, you've got the 200-day moving average, you've got uptrend support and wave equality. If we do see further weakness into the early part of this week, I'm looking to take back shorts in this area here. I'm not looking to go long. I'm just thinking that we've had a nice trade lower and potentially we can start to square up. Now, what I'm seeing in the S&P 500, last week I was a little bit unsure. We were sitting up around this area here, very close to this 56.69 high, but the acceleration lower into the back end of last week does put the S&P 500 largely on track with what I'm seeing in the Nasdaq. And that means that we have further to go to the downside. So for me, I'm looking for the S&P to push into this area here, somewhere between, let's say, 51.50 and 50.50-ish, wave equality, 200-day moving average, etc. You've got a previous low from the 5th of August here at 51.19. So into this area here, I'd be looking to square up shorts. In terms of where the stop loss would be, well, it's pretty easy because we've got a very clean cut up here in this 56.50 to 56.70 area. So while the S&P tracks below here, I think we've got further to go, and I'd be looking to take back my short position in this area here. Thank you for listening and have a good week ahead.